The Fed has a new chair. So, what does that mean for the life insurance industry? This week in life insurance, we're going back to Econ 101, and we are talking about interest rates. So, Kevin Warsh was confirmed by the Senate and has been sworn in as the new Fed chair. He seemingly has a mandate from the president to lower interest rates. So, what does that all mean for the industry? Well, first off, it's unclear whether he will actually be able to lower rates and whether the Fed will lower rates. Right now, the markets are pricing essentially a 50-50 coin flip as to whether they will lower rates or actually increase the short-term rate because of the current inflationary picture here in the United States. Secondly, if they lower rates, it doesn't necessarily impact the industry that directly. Remember, we're talking about the short-term overnight rate when we're talking about the Fed, and the life insurance industry cares much more about long-term rates. And right now, those are pretty high. As of today, as we're filming this, the rate is around for the 10-year Treasury is around 4.5%. It recently went up to as high as 4.7%. And even if those short-term rates go down, that might actually have the opposite impact on these longer-term rates, where the markets see that interest rate cut as something that will kind of not fight inflation, meaning that we see longer-term interest rates at a higher level. And that's probably good for the industry. Remember, we've been operating under a low interest rate environment for near a decade, and that really kind of gutted product economics. A long-term higher interest rate is actually great for fundamentals and could lead to things like better pricing of product, stronger general accounts, and we even start to see the impact of these higher rates with the dividends that the mutual companies are announcing, the record high dividends. Now, some carriers might have trouble in these higher rates because they saw yield in the low interest rate days going after kind of long-term illiquid affiliated private credit type investments that may cause trouble with their ability to tap liquidity, or which may cause some economic stress if this kind of interest rate spread continues and gets worse for them. But overall, the higher rate, especially a higher stable long-term rate, might actually be a good thing for the industry and really be great for the economic fundamentals of the products. That's all for this week. We'll talk to you soon.